Joining us to continue the conversation. Anh Tran is a managing partner at Sagement Wealth. And thanks for being here on the Schwab Network this afternoon.
Hi, Oliver. Thanks for having me on your show today.
Absolutely. All right, so when you talk to clients right now, everybody just wants to talk semiconductors, AI stuff. It's like demanding more attention because our index funds are now basically AI proxies. What do we do with that?
Right. It's been an exciting day today in the markets, and this is going to cause a lot of clients and retail investors to want to continue to look at the markets and ask, what should we be investing in? And so, for us, we are still looking at large cap growth. We are overweight in domestic, looking at growth, especially mega tech cap, right? We're looking at the large tech stocks. We see a lot of room for growth, especially after earnings seasons. It's kind of felt like the Oscars with earnings coming through. And we see a lot of focus on AI. The enthusiasm for AI continues. We see a need for the AI with our given population and aging population. There's a need for productivity, and with the aging population and lower workers in the workforce, I think this is going to be a play for us to see additional productivity with labor. So there's a lot going on, but today's been an exciting day for the markets.
So right now, our index concentration is working for us. Is there a live by the sword, die by the sword risk? Is this just the nature of this AI technology that's kind of makes sense if it's going to have productivity inducing effects that we should see it basically equal the size of the Russell 2000? I mean, Nvidia is like close to the entire small cap index at this point.
I know, and I think it hit 2 trillion today, right? Market
Exactly.
cap. So I think with all of this, one of the things that when we are working with our clients, all of this headline, all of these news that cause excitement for clients, we also have to make sure that clients focus on the long-term path, right? What are we looking at? We focus on long-term asset allocation, long-term investing. We take positions where we stay overweight a bit, like we say growth today, but we want to make sure that we focus on asset allocation and clients don't get overweight in any particular category. This is kind of like 2000, the dot-com. We had some major hype over technology stocks, and then look what happened. And we have to remind clients that the excitement is always there, and there's always going to be a lot of excitement in the news, but we have to stay continued on looking asset allocation. We've got some volatility, I think, that's still to come with interest rates and inflation, and the Fed's releasing their minutes yesterday. So I think that will continue to add volatility into the markets. And so we have to make sure that we stay the path.
Okay. And does right now that mean hedging in any way? Does it mean thinking about portfolio allocations in stocks, having to rebalance, put that into other stuff if it gets too concentrated? Or is this just accepting kind of the role of momentum in a portfolio and being okay with that?
Yeah, I think it's always important to make sure you review your allocation. It's one of those things where you will see sectors or sectors or asset classes become overweight, just like technology is today. We're seeing NASDAQ, Dow, S&P. We're seeing all large U.S. domestic equities, hitting all-time highs. And so we want to make sure that we're able to participate in the markets, but we also want to make sure that we're reevaluating portfolios and that we're taking a look at the allocation. Now, there have been times, I think, in the past year where people have really not looked at international as an allocation. And, when we look at asset allocation, there's always a place for international, there's bonds, there's large US domestic. And so now might be a time to look at your allocation and review everything, because the bond market, I think, is going to start performing like bonds again, because they haven't in the past. And then looking at international, we see Japan as, they hit an all-time high as well.
Mm-hmm.
And also the ECB. We are seeing inflation in Europe go down much quicker than the US. And so with that said, the ECB may be reducing rates. And if the Feds continue to wait and hold off on raising rates, then international may be a play as well. And we want to make sure that we have that as a portion in our portfolio.
What does that look like in terms of sizing or compared to the U.S. holding? Is the valuation appeal so strong that we should be chipping away at some of the expensive U.S. stuff, taking profits, shift it over to the rest of the world to give them a chance?
I wouldn't say I would go that far quite yet. I think we need to definitely consider it and make sure that we have exposure. I think that some might say we're overvalued right now in US, although I think that there's still room to grow. So continue to stick to the allocation based on your risk tolerance of what your international exposure should be. And so by doing that, I think that, there's always a room and we should continue to look at that. So, but we're looking at developing countries. We like Japan, we like Europe, we like Germany. And so those should be the sectors and international areas that we should look at.
China play a role or too risky right now?
I'm sorry, what was that?
China play a role in that international exposure, Ann?
I think China right now is a little bit too risky. We're not looking at China right now. I think we need to see a lot more news come out about, kind of where China is heading. But right now, I probably wouldn't put a big focus on China. We're really looking towards Japan, though.
Okay. All right. Japanese stocks certainly doing well. So dabble outside U.S., but just don't reach too far and don't chip away at U.S. tech as it costs to do so. Thanks for the commentary. Appreciate it, Ann. Thank you very much.
Thanks, Oliver. Have a good day.
You too. Anh Tran, Sage Mint Wealth.